Welcome to AHA Math and Science. Well, in today's video, we like to just kind of take a look at what happened to the market in the past week, and perhaps just kind of speculate on what may happen next. So just before we start talking about the markets, I just want to share this slide with you. This is basically a list of all the recessions going back to 1929, so almost 100 years, and kind of shows when the recession starts and then when the market bottoms. So for example, for the May 1937 recession, it started in May 1937, and actually the market bottom in March 1938. So it's almost like 10 months later. And then, for example, for the 1981 recession started in January 1980, and the market bottom 2 months later. So this is really kind of the delay from the recession starts to when the market bottoms. So essentially, the number kind of changes sometimes just like 1 month, and sometimes like 34 months. So the message is very clear. That is, you can see the SP 500 never bottoms before a recession. So that's the very clear message. So in our present time, I guess the question is whether a recession can be avoided. And because if the recession can only be avoided, then we can argue from this history data that the SP 500 has not bottomed yet. And in fact, in the past few weeks, I have argued from many different sort of indicators that we are either in a recession or we are very close to it. So recession is around the corner. And there's a video I made about that. I think leaders can kind of, if you're interested, maybe take a look. And actually, I just kind of a few days ago saw this information, which is about the leading economic index from the conference board. So this chart is also very interesting. And this is kind of just for the past 20 years also, but we already had 3 recessions. So, and for each of these sessions, it really kind of correspond to, you can see this dashed black line, which is when the LEI, the leading economic index, falls about 4%, from previous year. So this is kind of annual change in percent. Whenever that happens, you can see it's pretty much like a recession is just kind of coming. So the summary is that basically the LEI still signals a recession over the next 12 months. In fact, if I draw this sort of line here, which is like the change is like not negative 4%, but negative 8%. If you draw this line here, you can see whenever the LEI crossed the negative 8%, either recession is just around the corner or we are already in recession. Here we are already in the recession, just kind of started here. The recession just started here when the LEI crossed the negative 8% line. So here there's a little bit delay, just a couple months. So for March 2023, the leading economic index is already below the negative 8%. So which really kind of suggests to me that we might already be in recession, or the recession is very close. So it seems like from many different indicators, recession is not really avoidable. So if that's the case, and from the 100 years of data, you can see that, that market has not bottomed yet. So this is something just kind of to keep in mind. So now let's take a look at actually how the major indexes kind of fared in the past week. Well, there's really not much going on because for Friday, the change is just tiny. It's pretty much all the major indexes kind of flat, but we do kind of notice a pattern, which is like for every day we find like the market usually kind of opens low and then even goes low a little bit in the beginning, hours of the each trading day, and then later on, you always kind of regain the ground in the later of the day. So this is kind of a pattern we are seeing. It seems kind of repeats, and so really the net result is the market did not really kind of make much progress. So for the day, it's pretty much flat. Even though for the week, it's pretty much flat. This is the change over the past week. So not much kind of going on for the major index. And I guess you can see that the Russell 2000, which is the ETF, the index for the small cap companies, is green. So indicating a little more strength for the small cap companies than the SP 500 and the Nasdaq Composite. The other thing we want to kind of point out is the VIX, which is the volatility index, which is still kind of trending downward. And for the week, it actually was down about 0.3 or 1.7%. And in fact, on Wednesday, this past Wednesday, the VIX had the lowest close since November 2021. So these are basically the major information. So the indices are not really doing much, almost flat. The VIX, meanwhile, kind of moved down a little. So based on actually this pattern, it kind of suggests to me the market is kind of in the topping process. It's waiting for something. It's just like, the frame is not there yet, but the level of the index is already there. It's kind of close to the top. So just kind of consuming the time, so that the index just kind of goes nowhere. I suspect this may be, due to that, we have this big FOMC meeting coming on the May 2nd and 3rd. And then the market may be just kind of waiting for that to come. And it's kind of in this topping process. So now let's take a look at first the dollar index, because we did kind of look at the dollar index in last week's weekly summary. We point out that the dollar index had the lowest close, even in the past 52 weeks, even lower than the February 1st close. But we do notice something that is changing. That is, if you look at the MACD signal, which is now kind of trending upward. So the green is the MACD, and the red is MACD signal. And they're both kind of now start kind of going up. So they're still in the negative territory, but they're still going up. This also corresponds to the histogram, which is showing just here. It started kind of becoming turning from negative to positive. And we notice just in the past, several months, whenever this MACD is negative and trending upward, and the histogram started kind of turn around from negative to positive, the three instances here, here, and here. So let's mark them out. And that three instances, you can see that, and this is the third one that we are currently seeing. In the previous two times, you can see it's really kind of close to the top of the market. Very close to the top of the market. The market still had a little bit upside room left, but then quickly it just kind of rolls over. So now we are kind of in this third sort of case when the MACD histogram is kind of turning positive. And so this is something we're going to closely watching. So generally, this really kind of, when this is doing that, the dollar index is either become positive at kind of like showing flat, or start to kind of become, you can see the strength, the dollar index kind of becomes stronger. So that usually does not bode well for the market. So the dollar index is strong, market is weak. Dollar index goes up, market is going down. So we will keep an eye on the dollar index. If it's actually can be stay flat or even just kind of going upward, that usually tells that maybe the market is going to be low over. Now we actually take a look at the VIX signal, as we just kind of point out at the beginning of this presentation that that the VIX was kind of had the lowest close since November of 2021, even lower than the close of 16.60 that VIX made on January 3rd of 2022, which is corresponding to the top of the market. So when VIX was this low, it really kind of says the market participants are pretty compressed. They are kind of in a risk-on mode. So this not necessarily actually is actually a positive signal for the broad market, because we have seen cases, for example, in 2008, when the VIX was low and comparable to the low that it made during the top of the market on October 9, 2007, it's the top of the market for this bear market. And pretty soon the VIX turned around and the market kind of rolls over. So the VIX is low is not necessarily is actually a positive signal for the overall market, because that really kind of says that many market participants are kind of too compressed, and that usually sometimes kind of marks the top of the market. But the fact that in our current case, the VIX is really kind of low and even made it lower than this, we still kind of need to keep an eye. That could mean that, some of the major index can still kind of have a little bit run up, just like kind of wash out the weekends, weak hands who are kind of bearish on the market. So take a look at also the the trend analysis for the SPY. It's still on creating this downtrend, which we pointed out last time, and you can see that these are the pink lines are the 2 standard deviation above and below the trend line. So the red line in the middle is the trend line, and most of the time when either it's kind of the index goes below it, it's kind of rebound, and if the index goes get close to it, or just touch it, it's going to rebound, or it's going to kind of turn around and going downward. So at the present time, we are very close to this 2 sigma trend line. So the SPY, which is the ETF for the SP 500, may touch the 2 sigma trend line, or maybe already we have seen the top and 10 month. It's really kind of hard to say because in history, sometimes it's actually as long as to get close to a 2 sigma trend line and 10 month. Sometimes it does go above. So I would say it's kind of 50-50. My personal kind of hunch is that possibly it can get above touch the 2 sigma trend line. This is just kind of based on the time analysis, which because we have this FOMC meeting coming the next week, some action may happen and just kind of push the SPY get close to the 2 sigma trend line. And you can see that in 2008, during the bear market, during this bear market rally, you can see that it does kind of get above the 2 sigma trend line. So it's not like entirely unlikely it can happen. Sometimes it does not get to it, and then start kind of roll over. So it's kind of hard to say, but my personal hunch is that it may, in the present time, it may get to the 2 sigma trend line, meaning the SPY may get to like the 420 level, or the SP 500 gets to the 4200 level. Lastly, let's take a look at the comparison of the QQQ and the IWM. The QQQ is an ETF, so not for the Nasdaq 100 index. And the IWM is the ETF for the Russell 2000. So you can see that the clear divergence, which we pointed out last time, as QQQ is still on the uptrend. Albeit that it's actually showing some weakness since the beginning of April. So since the beginning of April, it's kind of showing some weakness, not really making any upside for the QQQ. And the IWM, it's still on this downward trend, but you can see like since April, it's slightly stronger than the QQQ because it's not really making a lower high. It's actually slightly making a higher high. So that's from beginning of April. IWM seems a little bit stronger than the QQQ. If that's the case, and coupled with the discussion we had about the SPY, may have a chance to touch have another 2% upside room. So what does that mean for the IWM? We noticed that IWM has a quick drop at the beginning of March, around actually March 9, March 10, the IWM actually gapped it down. So if IWM has a little bit upside room, the possible target you can see from the candle plot here could be actually the close of March 9. So on March 9, the IWM closed at 181.41, and then on March 10th it gapped down. So it could actually close this gap in the coming week, so that the IWM gets to the 181.41 level, or the Russell correspond to the Russell 2000 is about like 1820. Sorry. So this is basically kind of the major trends we are looking at. So just kind of quickly summarize what we discussed in this video. So the major indexes are not really kind of doing much. They kind of just kind of try to wait out, I guess, just kind of wasting the time, and so that the index is not only kind of moving high or low at this time. I think the market participants do not really kind of make any major changes. before the FOMC meeting. But it's more likely that the index may kind of go up a little bit. Usually like maybe within 2%. For both SPY and even for the IWM is also about 2% from the current level of 177.56. So that's what we can expect for the major index for the coming week. And we think the FOMC meeting on the May 2nd and 3rd could be the turning point for the market. And the preliminary trend is not good. We should be really careful because the VIX is too low, and this usually kind of suggests there's not much room going down, but in fact, the VIX may have more room to go up after the FOMC meeting. So just be alert on the big trend. And the really big picture is we'll be having recession, and the market usually does not bottom until the recession is in. And that could mean a lot of downside for the major indices because the low we made October, if it's not really a low, then the real low for this bear market would be even lower than the October low. So just kind of be alert on that. So I hope you have enjoyed this video and find the information present here kind of interesting. Again, your support really kind of means a lot to this channel. So please do not forget to click the like button and also subscribe to our channel. And thank you for watching.